Good afternoon, and today is October 6, 2023, and it's the final training day of this week. And it's the Friday afternoon, beautiful afternoon, right? And the markets, after we finish the first trading hour, the market still, continue to go up beautifully. So if someone go long, make a lot of money, right? It's a huge move today. So basically, we're gonna look today what caused that huge move up. It's amazing. Then we can see that it is definitely a short squeeze right there, right? It's a huge short squeeze right there. And if you look at the volume, we look at the Yahoo Finance right there, right? You see the volume. Whenever you see the volume is above 100 million share, then definitely huge, something going on, right? So you have a huge rally, or a very big and heavy sell up right there. So the average volume is around 76 million share right here, but they don't tell us right here what the average this average for month, or they don't give us the detail, right? But if I look at the, I think maybe that the average for daily, for monthly, right? If we look at our home view indicator, so we get the average for 60 day right there. So average 60D, so this stand for 60 day right there. So it's about 77 million share, which is pretty close to this number. So I believe this number is the average for 60 day, last 60 day. But we would love to have the description of this number, right? Sometimes when you put the average, you have to put the time window that you average, right? The duration. It will be very helpful. So when people read that number, they have a little bit contact, right? You just say average, and yeah, and it rose to $5 move. That's the giant move. When you see a $5 move on one day, it's the giant, huge right there. And I tried to looking for the pre-market volume, but they don't have it. So the pre-market volume gives you some indicator right there. Some early signal that there will be a lot of liquidity or transaction for the official trading day. That will give you some idea right there. So the volume for today is 114 million share right there. But this morning I captured the pre-market volume from the Thinkorswim platform, and it's 4 million. I haven't seen any pre-market volume this big at all. So far, the biggest one I see recently 2 million. But this morning, when I look at it, when I try to take the reading of this number, I know something big happened. I know it's very unusual move right there. So now we're gonna look at the chart and to see, yeah, the highest so far is in July 12th. The market right there. However, on the day of that trending, it not even break above 100 million share. But today 4 million share and the giant move. Right, the move very only less than 1%, but the move today is 1.19%. Yeah, I don't see any 4 million. For the record we don't have it. So that gives us some magnitude of the move today, and some early signal indicator to tell us what's coming. Look at the volume. So okay, so now look at the chart, the trade that we practice today. Let's see what we learned. We can review, right? All right, the first trade we practiced is the turtle soup short setup, and the second one is long, right? Basic 2 trade. They are turtle soup. Okay, now let's review this trade. So how do we see this trade is forming, right? So the idea is that turtle soup is a 4 breaks out setup. And you see that we push the sell stop at whenever we in order to trade the turtle soup, we have to we have to identify the entry level first, right? The entry level for the turtle soup is the previous last, the previous of the last 20 candle, the previous of the last 20 candle low or last 20 candle high right there. So that's an idea. Let's review that. So make sure that we are on the same page right here. So let's see. Let me pull out the instruction, the criteria for the turtle soup, right? So they say the first we have to identify this. Of course, we have to go a little backward. We have to identify the previous 20 day in this day, but in our case, when we implement is a 20 bar high or low. In this case, we do the previous 20 bar high must occur at least 4 candle, right? In this like a 4 trading section earlier. In this case, it's 4 candle, right? It have to be at least. This is very important. So we have to identify this. Okay, but in order to identify, first we see how it can make the new low. The lower the better. 20 new low, right? And then we go back to identify this level, because this is where we put our entry. You see, play an entry by, in this case, the sell above, right? The previous low. We will, for the sell, the reverse, we're gonna put 5 cents below the 20-day low, right? And in this case, in our case, it's going to be a sell stop. And okay, now look, right? I want to put it side by side so it's easy for us to get this concept. We need to get it into our system. Let me grab drink a little water. My throat kind of dry. So first, today, I mean, by today, they mean that the daily, but we try to do the entry on the 1 minute time frame. So today, that means the current candle, right? Okay, let's say this is the current candle right there, right? And then we go back to at least, 4 candle in order to identify the previous 20-day high, which is this guy right there. Exactly, that's our anchor candle right there, right? Which is at 422.81. I mean, when we start trade this setup, it takes us, a little bit time to do that. But when we do long enough, it becomes our second nature. We see it right away. So just be patient. It just takes practice. That's it. So basically, at the current candle, it makes a newer high. And then we go back at least 4 candles to see what is the previous 20 candle high, which in this case is this candle. We mark that our entry right there, right? And then we put the sell stop below. In this case, it's above, but we put below. Below the 20-day, which is below that level right there, this level. Right, when it move high here, we put below here. So we put a sell rate. You see, when it move high here, we put below right there. The reason why, because we see this candle is open below this one, and it raised the buy side, so it create a look like a breakout, right? But it turned out a false breakout. So that's an idea right there. So a lot of people, we thought, oh wow, we break out this level, so they're gonna enter long right here for the amateur trader or the people who chases. And also right here, right, it's open right here, and then when it go up right here, people will chase that, right? But we do the opposite. We put the sell stop right here. When it go up here, then we put sell stop right here. So as soon as it put out, we will execute our order, and it will never revisit this level again. You see that? And then it can just go down. So that's an idea right here. In order to trade the total source trade setup, we have to enter level. But if you look at ICT setup, you can see this is an order block, fabric gap, and this is just a retest of that order block right there. Yep. If you look from the ICT perspective right there. Okay, that's how we identify the entry. So entry time is 9:34, and like I said earlier, our target is conservatively, right? We want to be what? Just at lead level when we entry, right? Hold on. So if we entry here, then how do we, oh, okay, yeah, we enter here, we don't take the profit here, but we can tolerate when it breaks that, you know, sales target really. So that's an idea right there. So this target is valid. I thought that we misidentify our target. By the way, we have a second target at 419.75. Let's see if this target it realized. Let's see on a 1 minute time frame if the target got hit or is it mixed. So 419.75, right? So we stop right here, and then we say 419.7. No, it did not read 419.75. Okay, the reason why we want 175 because we look, I believe, yes, we look at the 1 hour time frame. Hold on, let me remove some of this so it will be less crowded, so we can see the candle forming better. Okay, so the reason why we thought that, well, is this level at 419.75, it will go and retest that, but it never hit that target. It continues to roll up. You see, it's just around here. That means our target right here is accurate. Okay, that's the first trade right there. So by the way, this target is never hit. So that's the feedback we learned right there. Okay, the second setup is, it's beautiful. Okay, let go and analyze why the second target it never hit. So we can learn next time. Well, the reason why we put a target right here because we thought it's gonna come down, but it did not. You see the rejection right here, and I think earlier when we do the first, trading hour, we did mention this, right? We saw that okay, it breaks structure, right? However, the long setup still valid, still respect. That means we have to get out any short that we are in right there. We have to close. We have to cover a short because it is respect the long order. You see the order block right here, right? This is the order block, right? And this order block is very critical because this order block is from a fall break from the yesterday. You remember yesterday? This is also a turtle soup setup right here. Let's put it in perspective so we are on the same way right here. So it's the turtle soup entry level on X1. 1 hour time frame right there first. So right there. So this level is important, and this order block is very important right there because you see this order block, and then you see the fair value gap right here, and you see the retest one and retest twice. And the reason why you see this is very, ICC call order block, but if you use other language, it we call the supply, right? Excuse me, I misspoke. Is the demand, right, or support level, and this support level is very critical. The buyer jump in right away. They don't let it make any significant, attack this liquidity pool at all. You see the huge reduction right there. That means a lot of buy order going and push it right there. All right, push the close, right there. So that means this support have a huge support. So that means the long setup still in play. So whenever we have a short setup, we have to close the position and get ready to switch into long, because the long setup is still valid. It not break it. If it break it, then we let our our profit run on a short setup. Otherwise, we have to cover, lock the profit and get out. Otherwise, we are gonna get stopped out. We will feel frustrated because a winning trade, or unrealized profit now is turned into our profits, and then we become frustrated because the winning trade become a losing trade. So that's the tricky position that we are in right now. I mean, we are in at that moment if we are in the trade. So the lesson for us is, how do we identify this is a market structure, really is market structure shift, or just a liquidity sweep. Okay, then the lesson for us is that is this lesson. It's very clear. The markets, now we look back with a calm mind and very calm mind, because not in the heat at the moment in real time, but with a calm mind and all the fear and all the emotion is not there. So we can see that the market really tell us that this is not a market structure shift. You remember the market structure shift is shift the first time, and then you don't want to go in the first time. You want for it to make another new low right here. So it gives you the confirmation, and then it swing high right here, and then boom, it sell up. So here is what we try to communicate over here, right? So you want a market structure shift, right? And then you want a confirmation. Okay, here's the confirmation. Let's say at this level, it make another lower low, which it take out the sell side liquidity, and then right here, when it go up here, right, then that where we go in a short. Okay. So that's the tricky right there. We have to see that. So don't jump in and short right away when it break around LIABLE. We have to observe to see any shift on the. That's the first thing, right? The second thing that we identified order block around so-called market structure right there. If that order block still respect, then definitely this one is not a market structure shift. Okay, it's just a sell side liquidity sweep already before it's basically it trap all the buy side up here. All right, it sweep and then it trap all the buy side from here. You see, it trap all that buy side liquidity at right here. I mean the huge buy side liquidity right there. But that's the move, right? First it take the buy side, then it take the sell side. See that? And then boom, it go up. That's the lesson we learn. Okay, let's put it into a verbiage so we have something so we can learn, right? So the basic lesson for today is, how do we identify this is a market structure shift, and it's just a sell-side liquidity sweep before it rally up. Okay, let's take a screenshot of this. By the way, we look at the 1 hour time frame. What do you want? We want to say right here. All right. We can say this is not a market structure shift. Why? Can you give me a reason? Can you give us a reason why? Because actually it seeks the internal liquidity right here. It seeks the fellow gap right here. You see the fellow gap from this, it just seeks that fellow gap, and it barely tests the order block. Why? Because we need the confirmation right here. So right here we still don't know. We still don't know it's market or shift. We have to wait, you know, for the confirmation, right? But you can make the argument right here. The market structure shift, and right here is the confirmation. But it's not quite the market structure here, because you see it's still close above here. It's just the liquidity rate right there. If it close below this level, then we give we agree with that, you know, logic, but it's not. So we don't consider it a market structure shift here. But right here, yes, it closed below this level. You see that? It's close that, right? And also, you can see that it also closed below this level. You see that? It's not much, but it closed that level. So this point is gives us more reason to conclude that this one is market shift, not this one. All right, if we agree on that, then we have to wait for another lower low to confirm this. Then we can go short. Otherwise, don't jump in short right here. We will get a short squeeze. Okay, let's go back to the why. Okay, the first reason we can say that the confirmation, which is another lower low, right? Or you can just sell liquidity taken. Not form, yes, we need to form right here, right? Which is this one. It's not form, yes. Well, the second that the bullish order block, right? Below the so-called the market structure, right? This is the point of interest, right? Yeah, do the below the so-called market structure shift or swing low, right? Still respect, right? It not violate that. Or It's still valid, right? It's still valid. That means we have to not jump into the gun right here. Then the logical force that the next logical force is go into a lower time frame to identify a turtle soup long setup, right? Because it's a fall breakout. And if it's not there, then definitely we go in short. What if it there is, what if right here is go down, right? What if this one it open right here, right? It going down. But the beautiful is that you see this candle it open above this one. If this candle open below this candle, give us some idea that it may go down. I mean, this is another assumption right there, because sometimes we saw that it opened right here and then it have more momentum to go up. Yeah, but there here you see long wicks. That means a lot of buy or order coming and push it. But that's another story. We're going to keep it short right now. Yeah, so that's our idea. All right, we run over 2 minutes, so be patient. Let me finish this and we can see. So base is this guy, right? And we need the confirmation right here, and it's not from yes. It just keep rolling, right? And this is the order block that we're talking about. Bullish order block right there. It's still valid. You see? Order block, federal gap, retest one, retest twice is create a what? Is create a fall breakout. Yes, fall breakout. Actually, wow, that's beautiful. Actually, look right here. You identify this is a turtle soup fall breakout also. Look at it. If you put your buy stop at this level, when it moved out here, you put buy stop right here, you know, then you get execute right here. And you maybe have to feel a little bit discomfort when it moved down to that level. But as soon as your order put in right here and you put your stop right here, even though this come back and retest, you never hit your stop loss, and you are in for a good dry up right there. Okay, that's beautiful. You see, just one setup, but we learned a ton lesson. That's amazing how many lessons and like opportunity that markets provide us. We just need an eye to see that. That's it. You just need an eye and see it, and then you need a good mental game to execute your trade. Then you are on your way to become millionaire. How's that? How that sound? How that sound? Okay. Okay, so that is on H1 time frame, right? Yeah, that's the logic why we go in on 1 minute time frame, and that's what we do for this long setup right there. So that is the precise the analyze we have. Now let's move up here. We see that on the right with that, you know, physics in mind on high point time frame, we go to 1 minute time frame and we identify. You see, so in the 1 minute time frame, we identify exactly right here where the fall break happen. We identify this candle is our anchor. This is the LIABLE right here, and it break down there, so we put a buy stop right there. And when we get our order filled at 10:09 right there, and you see it never no, actually it retest one here, twice, it retest twice, but we put our according to the status rule, we put our stop loss 5 cents below the latest swing low right here, then we are safe. Just don't move your stop loss right there. You have to ride through the volatility a little bit right here, but you are in for the huge ride right there. So that's the beautiful of the trade. Just stay in the trade. You either stop loss hit or target hit. That's it. So that's the rationale for the long set of total sub when we jump from the 1 hour time frame to 1 minute time frame. By the way, before we do that, I remember we tried to enter right here. Is that right? Yes, we tried to enter at this 10:05. We tried to enter right here by the buy limit, right? We put a buy limit. That means you buy mimic or market order right there. And if we do that, we get stop out. So don't do that, right? And another beauty of that, you see you have a fellow gap right here. When you identify the anchor entry and you see fellow gap right there, you know that the algo is shift right there. It gives you the mark, the signature that it's gonna shift to buy side liquidity run right there. Yes, we put the note right there. Break. Yep, I think that's it for the review today. We ran out of time, but I think that's good enough for today. And basically for this week, oh man, look at that, huge. Whoever look at that, whoever don't get our trade and want to keep the trade overnight, they got they got stop out right there, and all their profits gone. Look at that. Oh man, it's so brutal right there. But anyway, thank you. Talk to you later. Bye for now. Have a wonderful weekend, and talk to you on Monday. Monday is Columbus holiday, and the market is still open. I thought it closed, but I looked on the internet, it says open. So see you there. Bye for now.